Hello, everybody. This is Jake Stenziano, host of Jake and Gino podcast here with my co-host, the multifamily mentor, the coach, chef, the father, six, the best-selling author, the G-Daddy, Gino Barber. Gino, how's it going?
Jake, I'm doing good. I got one quick question for you, though, brother.
Hit.
Have you been to Fat Tuesday since our last podcast? Because you were talking about Fat Tuesdays the whole time, and wondering if you've been to one since we've had the last podcast.
I haven't. I don't necessarily prefer the watered-down drinks, and we're going to get off that, Gino. So I don't know. It's going to be a while before I go back. Maybe next time in the Caribbean. But getting off the cheap drinks, we have a very special guest. Today's guest is a featured Forbes 40 under 40 CEO and founder of Nitya Capital. He has 20 years plus experience in the multifamily space and has built a vertically integrated organization, which we love, all about vertical integration, over 3.5 billion in assets under management. So without further ado, Swapnil Agarwal, welcome to the show.
Thank you. Thank you for having me.
Hey, it is our pleasure. Now, my buddy Gino there, he's a little bit more of a, romance guy. He wants to rub your shoulders and talk to you a little bit. I like to jump in. So let's give folks the origin story. Let's talk about, going back in the day, starting the company. You built a great organization. Give us the high level overview of that.
Yeah, look, grew up in through very humble beginnings in India, in a very small town in central India. Then, always had aspirations and dreams to do something big in life, and ended up in Houston, Texas when I was 15 years old. I had just finished my ninth grade in India, and the connection, there was some family connection through my dad. So we came here, and my first, interaction with, you would say, Class B workforce housing multifamily was as a resident, right? I grew up in these communities, similar worse communities, for first 8 years of my life, uh, and so that was my exposure to the West, which was the visions and the dreams I had live growing up in the East about the West were of prosperity and wealth and happiness, and then I moved to Alief, Texas, and the truth couldn't be further off from what you imagine or what you see in the movies, and so in fact, I would say that some aspects of this, of living here versus living in a small town in India, were, I would actually prefer living in a small town. Even my house might have been a little bit worse off, but security, right? Security wasn't an issue for us back where I was growing up. People knew each other, every neighbor knew each other, your friend, your family, your big, so I grew up in that environment. And then you come to the West, so you get the worst of the West, right? You get the worst quality of living. And then the mindset is
Swapnil,
also,
I'm going to jump in
yes,
real quick on you because
yes.
I grew up in a very small town, and I think that's reflective of smaller communities and neighborhoods. I think regardless of where you tend to be in the world, the bigger the city, the more issues you potentially have. Because likewise, I grew up in a very small area. People knew each other's name. You could leave your doors open at night, and if your car broke down, your neighbor's coming to help you. So I think there's a component to the size and the values of where you're at, and sometimes that gets watered down as the populations and the cultural values and norms that we're accustomed to get diluted. So I just want to, I'll take you,
Yeah.
I'll take you to upstate New York, to the Finger Lakes one of these days, and I'll show you what I'm talking about. But carry on, sir.
Yeah. But you're right. So that was my first exposure, and again, uh, all of this adversities and challenges, and I think were advantages to me, to what it made me today. And because you just had to grind harder than anybody else to achieve the same result, right? So if somebody else would have had to go to school, it's an easy way for that person to go. His parents can drop him in the car. For me, it was an adventure, because either I could wake up at 5 and take a bus, and or walk, or if it's raining, then figure out. So there were always parallel paths that I learned to, uh, you know to achieve my objective or aim and goal. I always have multiple paths, right? But it's like baseball, right? You hit 3 out of 10. So once you get lucky, right, and luck comes in, right? You say, "But this guy is so lucky." But luck only happens to people because you might not know how many times he had failed before to get lucky that one time. So people
Hmm.
focus on that one success, but there were like 99 failures before that,
Hmm.
right? So it teaches you the tenacity, the grind, and look, culture, and you learn to adapt, right, to a whole new culture, and you got to figure it out. You're alone, right? I was the only child. I don't have any brothers, sisters. My parents were. My dad was working in a liquor store. My mom worked at a daycare, right? So I had to figure it out for myself,
Hmm.
right? And that's the environment I grew up in, and it made me, I think, who I am, and hopefully who I have to become later on, because this, I believe, is just a start for me. So went through the high school and grew up in Ely, went to Hastings High School, met a lot of close friends there. So really, it was a nice journey. I wouldn't change anything about it, right? It was great to
It made you
learn
who you
about.
are.
Yeah, it was learned to grade, made great friends, got adapted to this culture, and I felt that, hey, this is not something scary. This is something that I can conquer, right? And for whatever, you're in your show, like you said, Joe Rogan, I wanted to conquer, right? So I said, I think that I can conquer this because I feel I have an edge, right? And I still do. I feel I have an edge because my tenacity is unmatched, right? So I have that upbringing. My risk taking ability is unmatched, right? Because for me, it's nothing, right? I came from nothing. I'm happy. I live a very simple life, right?
Hmm.
Uh, so so that allows me the freedom, right? And then God has blessed me with the intellect, and again, I read a lot. So I mean, I have all that pedigree that you could envision. So again, but I had to take a route. I came to this country not as a citizen or a green card holder. I came as on a student visa. Then those were separate challenges. So I had to go, get admission, get a student visa. Then I had to find an employer who could sponsor my H-1 visa because it was all means to an end, right? Because I always wanted to be an entrepreneur, but I just couldn't do it. I didn't have the status, didn't have the capital. So I went to the route. I got my finance degree through University of Texas in Austin, and being a finance degree holder, the path of success in that field is become an investment banker and go private equity or hedge fund, and that's the route I took. I took on this position with a very prestigious bank at that time, Simmons and Company. It's a very boutique oil and gas investment bank, which later got acquired by Piper Jeffrey now. But so I was one of the four analysts that got picked in the country, and did the 2-year program. So got my training, the finance training as they call it there, and went in the private equity side. Again, I was always looking to explore new things. So I took on this new job, which is a private equity firm, and the position was in Hong Kong. So it was a American fund which had just raised Russell Platt, who's become my mentor and my friend and an investor now. But he is the original, Mesref fame. He started Morgan Stanley's the mezzanine, the Morgan Stanley's fund, which is the Mesref fund. And he went on to start this fund, which is called Forum Partners. And this is 2006. So they had just raised $800 million with literally nobody on the ground for Asia Pacific real estate focused strategy. And I enjoyed Simmons, but oil and gas wasn't for me. I wasn't an engineer or a geologist. I was a finance guy. I didn't see any potential for me in that. So I took on this role and moved to Hong Kong. So 2006 to 2013, I spent in Hong Kong working for Russell at Forum Partners. And I mean, we did really well. I mean, look, 2008, 9, the crisis happened. And for that period and vintage of the fund, we performed. And really, the mandate was to invest in real estate assets or real estate platforms across Asia Pacific. So, I would travel to some remote parts of China to do site visits. I'll be in Korea, I'll be in Japan. But again, this gave me additional mindset to start adapting, right? To learn about different people, to do business with. You could have the best convertible mezzanine bond you finance to a Chinese company, but if the sponsor or the state doesn't want to pay, I think they don't have to pay you back,
Hmm.
right? This is what you're seeing now in China, but that was very different period. Uh, so I mean, so you learn to, more than the deal itself, you learn to, underwrite the sponsor, you take the country risk. So it gives you a macro perspective. It again exposes you so many different, cultures, people, ways of doing business, right? And I think that again gave me a huge advantage again on top of what I already had. And then 2013 came. I said, Russell, I want to start my own business. So I moved back to Texas. And was my thesis, which is now everyone's, real deal. And even Wall Street Journal talks about it. But my thesis was to invest in workforce housing. This is 2013 I started. And I wanted to create
Swapna,
a
let me
vertical.
jump in with a quick
Yeah.
question. Since
Yeah.
you've done business in multiple countries, do you feel that the language of business is generally universal and black and white?
Yeah. Look, I think there's different cultures where I always feel that it doesn't, you always have to, when you're negotiating or doing business, you have to create a win-win situation for buyer, seller, whichever party. You cannot come to where you're taking advantage of someone, and that is universal, right? That part is
Trading is
universal.
trading, right?
Yes, that is universal. When you take everyone along, I mean, you be courteous, you respectful, and do business the right way, right?
Different
Now when
cultural
you
norms, but I just get the general feeling that it is the universally spoken language. Trading,
yes,
essentially.
businesses, yes,
Yeah,
yes, yes.
yeah. So carry on, please.
Yes. So then in 2013, I started Nitya Capital and really, bought our first asset, 37 units in Louisville, Texas, and $1.3 million. Had a friend co-sign for a loan for Wells Fargo balance sheet loan for $1 million. 300,000 I was going to invest, which was my savings, but I showed it to a few friends. They said we would love to invest 50,000. So I put my own 100, took four friends' money and bought this asset. And I said, well, next one I bought, again, I'm sourcing these deals from LoopNet, right? Because I didn't know any better.
Gino just said
Uh,
LoopNet is back, by the way.
LoopNet's back, my friend.
I
So
heard it got acquired by someone.
did
No,
they?
no,
So
meaning deal sourcing on LoopNet is back because
I
we
see,
we
I see.
started off
Right.
the same year and our first deal was on LoopNet. So
our
we
first three
we
deals
hear
were
you
on
loud
LoopNet.
and clear, my friend.
So I remember the first tour I show up, and there's this broker, local Houston Income Property, Bishop, a good friend of mine now. And so I show up. This is a property in North Houston in Tidwell, which is very ghetto, and the property is called Nordling Chateau. It's a French name, and there is not a single anything French for 10-mile radius
Sounds
around,
fancy
right?
though.
Right. So yeah, it's very fancy, and the seller was a guy named Mike Mizrachi. He has his gold chains, right? A crazy guy. And so they said, so you're gonna buy this? And I was early 30s, and I said, yeah. And they said, so very, very doubtful. I mean, they probably gave me probably a 0.01% chance that I was gonna close. Right? Because I was too clean and white collar at like a D minus property at best, right?
Like this guy's in
and,
for it.
and seriously, after I acquired, I seriously thought this was the worst mistake I made, because the day I took over, the seller was such a piece of crap. He took 20 condenser units from individual units. So he took 20 of them, and these guys show up on my office like, hey, we have a hole in the roof. I was like, what do you mean there's a hole? And the guy took the whole thing, and there's a hole. So, and then he had my diligence sucked, right? I didn't know what I
Did
was
he leave
doing.
any appliances for you?
No, he never had appliances. He had special one-page leases. He had special one-page leases saying, "I'm renting you this apartment for $200, but there's no appliances." And that's what the actual contracts were instead of the lease
Holy
contracts.
shit.
So
And so
Swapnil, time
my
out. I have to jump in real quick because
yes.
if you want to avoid Swapnil's mistakes, go to jakeandgino.com/apply and we will save you hundreds and hundreds of thousands of dollars and you will not be robbed at closing like Swapnil did. But the reality is, at least you took massive action and you didn't let that first disaster stop you from going to
Yeah.
the next one. Most of us would have been stuck in fear and said, well, what do I do next? And instead, you've been talking about the last few minutes of your background of getting through adversity. That probably was just like, it's another one of those. But
So
I've
basically,
never
I
heard
tell
that
you, so
one.
I had bought that apartment, 160 units. for 4 million. So it was 25,000 a unit. And I had a 500,000 capex budget. So I started with literally 60% occupancy, and I kid you not, worked like crazy, even though I was regretting it. And I sold it for 5.6 6 months later. So I doubled 1.4, became 3 million, right?
Wow.
Then I took that 3 million, I bought a $10 million property, right? So long story short, from that point on, which was 2013 to 2024, we've done 129 of these, but obviously the size got bigger. So almost over 5 billion of acquisition across this 129. And I what I did manage to do well, and I still we still continue to, except in this market, is we're not I'm creating value, and I'm looking to monetize the value pretty quickly,
Mhm.
right? So, like I said, 6 months for this deal, next deal, 1 year, 1 year. If I couldn't sell, I would cash out, refi, return all the equity back, right? So, for example, an investor who had invested, let's say, $100 in the first deal and never cashed out and kept rolling, that 100 would be 970,000,
Yeah.
right? 9.7 times, right?
Mhm.
And so in our history, we've sold 77 of those. We have about 44, 45 assets now, four or five are commercial. And we have a perfect track record. So 77 and 0, 26% IRR, never have defaulted, and we'll get into that. Never have missed a single mortgage payment in my entire history,
Wow.
right?
Hey, here's a bigger
So
question. Have you always made payroll?
yes, 100%.
See,
That's
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 that, dude. That's a thing that no one ever asks, but your folks always. And this is the difference between an entrepreneur because, like,
100%,
as
bro.
an
I mean,
entrepreneur, the
600
pay may
employees
not
I
be there
have
for
now,
you,
right?
right?
Yeah, I have, yeah.
But they have that guarantee because you did the right thing. So before we get too long into this,
Yes.
detail in your opinion the market cycle from 2019 to 2024 because you've touched them all using a baseball reference. You've seen
Yeah.
a lot in a short window. So if you don't mind, in your own words, just detail the market cycle from 19 to today.
Look, it all basically it all the market changed because of COVID, right? That's
Mhm.
where the quantitative easing happened with the
Hmm.
Fed, right? So not only the Fed did the quantitative easing, you had a federal government still giving so much free money, and they've been continuing to give free money since 2020, right? So 4 years of this spending like insanity, and you see that in U.S. debt numbers, and it's trillions. I mean, how every 120 days you're adding $1 trillion of debt, right?
Something, yeah, I saw
Now,
something like that.
yeah, now
It's
now
nuts.
US's debt
Yeah,
burden is more than their defense spending,
yeah.
right? Which is scary, right? If you think about it, like you're just so what they're doing is they're just printing their own money and they're spending their own money. Jobs report came out today. You saw 300. I mean, the largest job hire is the government. So I think we're in this pretty bad vicious cycle. So, I mean, going back to 19, so 19, I think 19, the rates were pretty not too low. I think the treasury was around 4.5, but the spreads were low. There was no fear, there was no risk, right? So 2020 happened, interest rate went to zero. Of course, 2021, 2020, the greatest years that, people will probably see in their lives, right? When it comes to our sector. But you can't go better than,
Multifamily all-time highs for sales prices, transactions.
yeah.
Brokers were kings and queens, and they're
Yes,
singing a little bit of
yes,
a different tune now. But
Well, that was
yes.
2022. So 2022 was the high. So Freddie has said we're down about 15%. Cap rates have probably decompressed about a point and a half. Now, I mean, we have coaches telling us right now, C properties in marginal areas are A caps. They haven't seen A caps for
he
C
said
properties.
eight.
Eight caps, my friend, not four caps. A four caps of foreclosure. But I mean, that's what people were buying back in 21, 22. And if they didn't get out, they're in big trouble. So you're
Yeah.
seeing this, Swapnil 21, 22. Are you still buying at this point? You're still buying assets at this point?
So look, I think the cycle Gino calls for, look, there's two things in the last 2 years I had to do. So I pretty quickly realized that this was a time to play defense, right? So really over the last 18, 24 months, because we focus exclusively on affordable housing and low income housing, I was able to work with the cities and housing authorities in different ways. About two-thirds of my portfolios are in Texas and Florida, and there are different laws which allows for tax exemptions of different sorts. So, and property taxes, as you know, are the largest expense item, right? So
Mhm.
that's what I had been going through in the last 18 months. Now I'm in the process of monetizing it, putting long-term debt. And I mean, this portfolio too. I mean, look, this has automatic extensions to 2027. One of the requirements for them was to buy a 12-month cap. Now there's 12 assets in this portfolio. I'm refinancing three of them by month 10. And we already know that the cap cost is going to go down. So I said I only want to buy a 6-month cap, and that's the negotiation we're having versus what is reported in the media about default. So it's all planned, it's all
So
strategic. You're
So
working with the
let's talk on
servicers.
that a little bit. So there's,
Yeah.
I've seen you got this great headshot getting thrown around there on the real deal and some of these things, and I haven't full transparency haven't dove into it that much because you're seeing this is the for the real deal and some of these other outlets. This is their thing now, right? This is their attention
Yeah,
grabber.
yeah, yeah,
You
yeah,
know, and
yeah.
and
But
it's
they don't
always
know the damage
vague.
they can cause because, I have thousands of investors and lenders, and it just makes my job harder.
Oh, no, no, they understand fully. So don't get
Yeah.
that twisted. They don't care, right? And it's all the way they monetize is to put whatever they can out there to get the juice pulled in, right? So I think this is a fair time for you to describe and give your side of the story because look, I see these things getting tossed around. There's been things about Gino myself put out there that factually were just out of left field. Like, where is this coming from? So, maybe give the folks out there a little bit about the articles and the different things that have been put out there, and
Yeah.
then your
So
side of it. Because,
first of all, the
yeah,
way they put out that article, it,
this is
it
the real deal you're
sounds,
talking about.
yeah,
Yeah,
it sounded like I mean, what they didn't specify is just specific to one portfolio, first of all,
yeah.
right? So now I have like 1,000 investors who are not even invested in this damn thing calling me and worrying about it, and other lenders. I said it has nothing to do. It's not like a platform level loan, first of all, right? So this deal was a 12 asset portfolio we acquired in 2022, right? Spread over 60% of the portfolio is in Indianapolis, and guess what? Last 2 years, Indianapolis is the hottest market in the whole country, right? In
Mhm.
terms of rent growth. So assets have grown, NOI has grown from 16.9 to 22.7, right? Now there's three assets and out of this 12 are in Texas, which I got these PFC tax exempt. I'm in the process of refinancing them. And so I don't want to waste $11 million buying a 12-month cap. It's not a prudent strategy. That makes me a bad GP, right? Now, this was a CMBS SASB loan. Of course, there's no real lender behind it, so you have to deal with special servicing when you're negotiating, right? So guess what? In this situation, we pre-negotiated a pre-negotiation letter with the servicer, knowing that it's coming, and so that we don't go in default, so we can negotiate, right? and
Mhm.
and we are very close to coming to an agreement. So, and that's why I'm doing the interview, because I know you'll probably publish it 1 week later. But so we are coming due, we're going to sign first of all, they'll will have 90 days to buy a cap. And guess what? The cap cost is coming down, right? I mean, unless you keep getting the stupid job data like we got today, but hopefully if the CPI comes good for the next 2 months, then Fed is going to cut. The odds are 69% today for a June rate cut, right? So if you're buying a cap today versus you're buying a cap in June, guess which cap will be cheaper? Same duration
Mhm.
in
Mhm.
June,
You're
Yes.
you're
right?
attempting to do the best thing for your investors,
Absolutely,
and there's
every time
investors.
I've done it, like
Yeah.
in my entire history, I've not, like you said, never missed a payroll, but I've never missed a single mortgage payment. So I don't know why the hate, right? That's my problem. It's like I should be like an
But that's but
aspiration for
that's
people to
that's
look
that's
up
the
to.
media swap, no, though. Like,
Yeah.
it sells, and it's not about anything other than monetizing the eyeballs. So it's you just have to be like, look at it. You're fresh meat. for this platform, and I don't see any other way around it, unfortunately.
Swapnil, the only thing I would say is whatever doesn't kill you makes you stronger.
Yeah,
This is
absolutely.
just
Look, I've
something.
I've learned to cut the noise now, Gino, and
Yeah.
for me, it's like let my actions speak louder than words, right?
Hmm.
So it's fine. I am working in like because of this reputation. You asked me about my acquisition. I'm now working directly with lenders in foreclosure situations where I'm buying debt deals directly with them, right?
Hmm.
So why does that they come to me, or why do they partner? Because we have good track record, right? We
Hmm.
have a good reputation amongst the people who need to know. Now they can put this stuff on Instagram, nobody cared, like nobody can control it. But people who've done business with me, president of one of the largest listed REIT emailed me right after the article. He said, "You're one of the most entrepreneurial borrowers in our whole industry. We're always here to bank you. I'll send you the screenshot." But so you get those messages, and I'm like, it doesn't. I said, don't worry about it, Mike. I don't even look at it unless people tell me about it. But I guess that's the unfortunate part, because then people keep messaging you about it, so you can't ignore it,
But
right?
It's
Swapnil,
annoying though, Gino, as an entrepreneur. Sorry, to
Yeah,
his job gets harder though,
very
because
hard.
these people now are putting fear and doubt into his investor base, and they're thinking, well, am I involved in that portfolio? And the folks that are in it are thinking it's doomsday, even though he's working it out right now. So I think that's the hard thing, is that it's brand damage and it's
Yeah,
reputational
how do you get
damage.
around it, man? And you know
Yeah,
what? That journalist actually emailed. First of all, she emailed me, which happened to be 15 minutes before she published the article, and I happened to
but
see that
that's
email.
by
I
design though,
And
Swapnil.
I responded. I responded, and I told her it's not a freaking default, right? It's like it's under pre-negotiation agreement, and we're
Swapnil, is that
negotiating.
going to sell? Is that going to sell though for
I
them?
know, but that's just doing. I mean, I was talking to my lawyers too. I'm like, can they sue? I know media has a lot of rights with this thing, but I mean, because the problem is the title they put is what people read. Nobody actually reads the article.
Yeah.
and Swapnil, the other problem is
Nobody reads. It's the
if
headline. The
they
headline's what sells.
if
Yeah.
they
Yeah,
retract it 2 months later, nobody's going to even remember that.
nobody will
Nothing.
That's the
care.
other
Yeah,
problem.
yeah.
Yeah,
Maybe
that's
there's
what.
a pat on the back, right? Yeah, good job.
So what's the path forward look like? How do you navigate the waters now? You kind of got these targets on your back. What do you got to do differently moving
But bro, the
forward here?
thing is that I thrive under pressure, and I've
Yeah.
always had in my life. And I think, it's I like to always look at the grades. I said this is fourth quarter Michael Jordan time, right? People who are gonna come out of this cycle, right, are gonna be the ones who's gonna go on to dominate.
Yeah.
Mhm.
And I wanna be amongst those. So everything that I'm doing today is is in that regard. Whether I'm playing defense to protect my current assets, whether I'm being aggressive on acquiring, it's all going to be in that direction where I want to be amongst the greats, right? People who survive the hardest time become the great, right? Who win in the hard time. And I'm actually feel blessed and I feel grateful that last 10 years everyone was doing great, right? Like who's to say why Swapnil is better than some jack, you know, over there. So for me, I said, look, this is a time when you prove your abilities, you prove your caliber, and I let my actions speak, and only time will tell, right?
Mhm.
Hopefully they give you the pat on the back article in 6 months when your work is out. But for
Don't hold
some
your
reason, I
breath.
don't see that
Uh,
happening. So
but
so
I would love
Swapnil,
it. I would love to rub it in. I mean, this is a lot. These articles provide a lot of fuel inside. It shouldn't. I also should have a fuel always, but in a positive way for me, right? Because I'm not. It doesn't make me angry anymore. I feel like I feel 100% confident in my abilities, and I know what I can show to them. So I thrive under it.
There's to me an admirable quality about it, and that's why I'm a big fan of Grant Cardone. I'm even admire President Trump because when you're an entrepreneur and you live a lonely life, I got Jake as a partner. There's no one else I can really cry to. And when you're constantly being bombarded, and whether you deserve it or not, it takes a toll on you, whether you want to listen to it or not. And to continue to go back and continue to throw punches is really an admirable thing. And for those people who don't own anything and want to sit around and make accusations against you or Jake and Gino or Grant or whatever, those of us that are doing it, we're in your corner because we understand the the heartache.
Gino just said the man in the arena quote.
Yeah,
Yeah,
did I? I
yeah.
don't know what the hell I'm saying. I'm just,
It's not the it's not the critic that counts, right? That one. Yeah.
yeah, but it can be challenging. So for anybody listening to this, you may be in Swapnil's situation, you may be getting lambasted, but just know that you're not alone. You're building something. There's two ways to build a bigger building. You can either tear everyone else's down, or you can make yours bigger. And it sounds like to me, Swapnil's not tearing anyone else's down. Swapnil's big and his building his bigger, and we should all be focusing on our buildings. And if we all did that, man, the world would be a completely different place.
Absolutely. And I think, look, in times like these, it's this times like these are not applicable to one single person or asset. It's
Mm-hmm.
affecting the whole industry. And this is the time where people should stick together, right? Instead of creating fear. And this is the stupidest thing because it's not like a zoned in phenomena to one person. I mean, they report Blackstone foreclosures on hundreds of millions of dollars as Starwoods, and I mean, it's the industry. It's only dependent on interest rates. Okay, there's 100% inverse correlation of valuations and cash flows. I mean, it's a simple fact. I just can't imagine how many times they're going to beat the same horn, right?
Mm-hmm.
Mortgage payments have gone up by this million.
There's a difference though,
VS,
because they'll
huh?
put Blackstone and the Blackstone logo up in the ad, and everyone's like, "Oh, a company's foreclosed on something. Who gives a shit?"
Yeah,
They're putting you up there in your face. This
yeah,
guy, the only
yeah,
one
yeah.
by himself with no other team members, he's the one. Burn him! Like that's what they want, right? That sells eyeballs, and that's the
And
goal
Jake,
of it.
before we go to the break, this is something that's really important. The Swapnil, you said that I don't really want to gloss over. You say there's fear. They're promoting this fear, which I think
Absolutely.
sucks, and it's
Yes.
causing a lot more uncertainty in the market. And
Yes.
I don't know if it's by design or not, but I mean, I can see the demand for multifamily has dropped significantly, even if you have capital. So that they're doing a big disservice because there's still a lot of really great assets out there that you can acquire. There's still a lot of stuff
No, I
that can
mean,
be
look, they're
done.
doing it to someone like me whose entire history, bro, I've never lost a single penny.
Uh-huh.
On 8 billion of transactions, not a single stakeholder, equity, debt, whoever you call it,
Mm-hmm.
never lost money. So I'm like, okay, and then I feel hurt too, right? Because then my investors are questioning whatever. And I'm like, dude, look at my track record, man. Like, just have some faith for freaking
Mm-hmm.
sake, right? Like,
Mm-hmm.
but you move on, you learn, and it happened the first. I mean, this is the 11th article, so I'm not talking about this happened this time, but over 11 times you become like whatever, right? Like, yeah, just ignore. So we just send out an
Might as
email
well
and
do
start.
another one. Make it 12. Right?
Yeah, I'm like, that's what I said in one of the comments. I said, use a newer picture. I look better now, I think. So,
Get one with like my shirt off, right? So at least it's flattering here.
yeah.
All right, guys, let's take a quick time out to hear from our sponsor. Now, we have had a great run in multifamily, going from 0 units to over 250 million in assets. That's over 2,000 apartment deals that we've been able to purchase through our framework: buy right, manage right, and finance right.
Now, Jake and I, we created the Jake and Gino community back in 2015. We launched our first book, Build Our Profits. And since then, our students have closed over 60,000 units. That's over $4 billion in assets they've been able to close over the last 6 years.
And that's why this community has been so successful. We call it results-based education, and we pour back into the community everything that we've learned on our journey from 0 to 2,000 units, and all our systems and scale that we use on our very own property management and investing companies.
Jake, I love that. It's not just education, it's implementation. So what I want you to do, click on that link down below, apply to work with our team, see how we can help you on your journey in multifamily.
All right, we are back. Let's talk a little bit about the path forward. Is there anything that you're doing differently on the business side of things due to the market cycle? Anything that you're changing up that maybe would add value to an early investor that's listening to the show now?
Yeah, look, this cycle, obviously, whenever challenges and adversities come, you become smarter, you learn your lessons, and you try to come out better. So we're, in my operations side, look, we're trying to be as cost effective as possible. Because, look, the truth is, NOI margins, forget the capital markets, NOI margins in multifamily have come down 10% minimum.
Mm-hmm.
Taxes, insurance, payroll, and utilities if you're in Texas. Okay,
Mm-hmm.
that's 90% of your total expense per month. Your NOI margin that used to be 40+% is 30% now.
Mhm.
Right? So I said, okay, what can we do? So obviously we went through a lot of these PFC, affordable housing tax exemption programs. So that took care of the taxes, which was 35% of your OPEX, right? And
Mhm.
then we said, okay, insurance. Insurance has been a mess too, right? So we look to get creative, and we set up our own program, and that allowed us to save over 30% in insurance costs. This we just renewed March 1st, and our insurance renewal was 37% cheaper. I don't think anyone in the world can do that, right?
Mhm.
Then we are setting up systems. We're hiring a lot in India in terms of back office. We have a 70-member team in India, all accounting, asset management. A lot of the tasks get done from India now, so that allows us to keep our staff
I
here
think that's going to
efficient.
become more and more prominent. I think you're going to see that from
Yes.
groups. We're a fraction of your size. We only got 80 some people on the team right now, but we've started adopting that this quarter as well. Yeah.
Yeah. So I'm doing a lot on that. Payroll, look, industry is running at 1,400-1,500 bucks. We're $800 a unit, right? I mean, nobody can compete. So like literally on every item of relevance where an impact could be made, we've done that, and that's what's allowed us to now be safe versus
Well, think of the control
99%,
that you have of being vertically integrated and being able to manage those costs versus the folks that are running third party. And I know there's, most of the folks
especially in
in
this market when your working capital
yes,
is tight,
yes.
right? I have my own vendors, contractors. Yeah, I have a lot of payables right now, but I can delay them. But that's the game I can play because I have it under control. If you have a third party management company, they're just sending you an invoice at the end of the month.
And
Mhm.
everything that you do, like, because we run the same way. All of our capex teams are doing the internal turns. We're handling a lot of the heavy lifts ourselves. And yes, it's a constant on the payroll, but I know that we're saving a ton of money on the back end at the end of the day. So it's
Yeah.
having that control and that vertical integration that a lot of folks poo poo at and say, no, you just got to run third party. And vertical integration for life, baby. It's like, to me, it's the only way, because you have that control, and when things like this do happen, you're in the driver's seat versus pleading on a Zoom call with a third party to do what you need them to do, and then praying that it gets pulled through. So
Yeah.
I feel you loud and clear on that one. Um, on the personal development side, anything that you've read recently that's added value to your life
I
that you want to
did.
share?
I did.
Yeah.
I did. I just a friend of mine had uh, uh, told me about a book called 28 Letters. 28 Letters uh, that J.D. Rockefeller wrote to his son.
Mm.
So not 28, 38 letters, and there's three bonuses. There's 41 letters. And there's a book. So I just read that amazing book. I mean, this is the legend of. This is not even legend. This is the founder of capitalism, probably you can call, right, in America, and J.D. Rockefeller. And in these letters, it's funny because he's talking about, and it's so funny that we're talking about it. So what's so funny is one of his letters. He's just basically bitching, right, to his son. He's like, "Fuck this media. They all talk shit about." And I'm like, this article had just come out of me, so I read that letter that night. I said, "This is why God blessed me with this letter tonight."
That is so cool.
So I said, "Look, even JD freaking Rockefeller was getting bitched on."
It's these intersections in life that can bring you peace at times, right?
So amazing book, So a lot of wisdom in that, and a lot of things you kind of know, but it's almost, my father passed away unfortunately 3 years ago, but I'd never really had a mentor to say, and really, in the last few months and year, I've been so blessed with having some amazing mentors. One of my mentors in life been Ray Dalio, and he came in my life a few months ago, and I've spent some good time with him. Unbelievable, right? So I mean, I think, and then through this thing too, I feel when I was reading this book, I felt like it's like my father writing it to me, because growing up I was on my own from the beginning, right?
Mhm.
So you feel that and great wisdom, of course, in terms of money, finance, behavior, how to negotiate. And he's here in the book, in one of these letters, he's bitching about JP Morgan. He's like, fuck that guy. He's trying to take my he's like, one of his letters bitching about Carnegie. And so you're reading all this shit, and it's like pretty funny, it's pretty interesting.
The Battle of the Titans, for sure.
Yeah.
Um, So let's give you an opportunity here, folks listening. They like the vertical the vertical things you got going on here, vertical integration. Excuse me. What's the best way for folks to get a hold of you?
My email, sagarwal, agarwal at nityacapital.com. And LinkedIn, I usually check and I'm active on. So those are the two platforms.
Hit up the nityacapital.com and check out what these guys got going on. They're doing great things over there.
Yeah.
Gino, are you ready?
I am ready, Jake. We got
Bring
a
us
young
home here.
Swapnil, born in a small town in India, decides to come to the U.S. with his family in Houston, Texas, 9th grade. His father is working at a liquor store, and his mom is working at a daycare. And he's actually, first 8 years of his life in the U.S., he's actually living in an apartment complex. And he continues to work. He goes to school. He gets a finance degree and says, I'm going to go overseas in Asia, work for a few years. Gets back to the U.S. in 2013 and goes and looks at La Chateau, a 37 unit. And he says, bro, there's no French people around here. I don't know what's going on. I'm going to buy
Where's the
this
French
deal.
onion soup, right?
I'm going to buy this deal. And he puts together, he needs $1 million. He gets a few friends to invest. First day he owns the thing. He looks up and he goes, holy crap, there's the sky. Someone came and ripped me off. But what the hell's going on here? Appliances. Boy, I should have called Jake and Gino back then. They could have saved me a few bucks, but I didn't know Jake and Gino back then. But it's okay. But that didn't stop him. He continued to buy. And 1 million became 3 million. 3 million became 7 million, became 10 million. He understood the velocity of money, and that's what he's been doing ever since. And he's into, I don't know how many assets he's got, over $5 billion in transactions. Never missed a mortgage payment, never missed payroll. And he's continued to rock on. And now he's reading J.D. Rockefeller's notes, and he's saying, wow, if he can get crapped on, I guess I can get crapped on too. It's okay. And listen, a lot of admiration here, brother. Keep rocking it. Don't listen to anybody. Use it as fuel. Continue to grow. Worry about yourself. Your input shapes your outlook in life. And make sure that input is coming from people you really respect, like Ray Dalio and like others who really had a profound influence in your life. So keep working on that input. Don't listen to the haters, my friend.
Thank you. Thank you so much. Thank you for having me on your show. And it was great reconnecting.
My pleasure, brother. Jake, bring us home, brother.
You got it, guys. As always, we believe in buying deals for the long term. Think in decades. I'm Jake. He's the G Daddy, and we make it happen. We'll see you next time.
Thanks guys.